Welcome back to Insibles, everyone. I hope you guys are having a blessed day. Again, going over my daily plan on exactly how I plan on playing into the SPY. Again, anticipating, as Nick Timmeros mentioned again about a month ago, that we would have a possible Fed pivot coming. And as you guys can see, we did get our decrease in CPI, giving us that anticipation. We have been looking to see if we would respect our 20-day moving average. As you guys can see, an indecisive doji candle showing us that we did decide to continue on higher, looking to see if we will continue on higher. We do have the upper end of our channel coming up. We also do have jobs reports coming in Wednesday, Thursday, and Friday, and we have GDP coming out on Wednesday as well. Again, Jerome Powell for the last few months has been mentioning that he wants a decrease in CPI, which we did get our decrease in CPI. But now our question is, will we get those bad jobs data reports to give us that anticipation of a possible decrease in rates to come? Again, that is the question. Will we get our proof of concept on the upper end of our channel here? I'm going to go over exactly what we're looking for here. Now, before I jump into this, you guys can do me a huge favor, smash that like button if you find this video useful at all. Hit subscribe if you want to see my daily plan on exactly how I plan on playing into the market every single day. We go over candle structure, overall strength levels, and any key indicators that we need to be focused on. And again, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Instables, and again, we mention any breakout that is worth looking at throughout the day, go to instables.com in the description below, and you will never miss a breakout alert today again. So jumping into the S&P with you guys here on the SPY, again, recapping on our weekly chart, I think is very key here as we are watching our 20 weekly moving average, looking to see if we will respect it. Prior, we did jump above our 20 weekly moving average. We failed to hold. As you guys can see, we did not get our 20 to cross back over our 50 weekly moving average. As you guys can see at this point in time, we still are not curling above here. We are looking to see if we will continue to curl up here. That is the move and the continuation that we're looking for. Again, jumping above our channel here, looking to see if we will get that proof of concept to continue on higher. And in my opinion, with jobs reports coming out this week, with that decrease in CPI that we had again a couple of weeks ago, in my opinion, with our decrease in CPI and our increase in unemployment that again Powell has been looking for, we can continue on higher here. However, if jobs reports come out better than expected, then that means the Feds have more room to increase rates. So again, that is the watch this week. Again, jobs reports will be coming out Wednesday, Thursday, and Friday. We will be mentioning them in the Insibles room as always. And again, going over our largest indicator that we have been watching, as you guys can see, looking at the DXY, this has been our strength against the market. As you guys can see, we had an overreaction to the downside here on the dollar as we had our increase in CPI. Sitting on a flag here, looking to see if we will continue on lower with this flag. As you guys can see, we are just above our 50 weekly moving average here on the dollar. So we don't want to see any type of bounce here. We want to see if we can drop down below our 50 weekly moving average, or if we can get our 20 to start to curl over here to get that bearish momentum and get that proof of concept here with the dollar breaking down and truly breaking down instead of having a correctionary phase here. So again, looking for that proof of concept here on the dollar to show that we are going to increase with strength in the SPY. Again, that is why we have been indecisive, is because we are testing our 50 weekly moving average on the dollar. So looking to see if we will get that proof of concept again on the upper end of our channel here. Now, as far as our daily candle structure, as you guys can see, sitting on a gap up, respecting our 20-day moving average here with our doji candle coming out indecisively, decided to continue on higher here as we did mention a few days ago. And as you guys can see now, looking to see if we will get that proof of concept on the upper end of our channel. We will be looking at our strength here. As you guys can see on the MACD showing us our strength, we have been increasing in buy pressure for the last few days. However, on Friday, as you guys can see, getting a slight decrease in buy pressure. So we very much do need that increase in buy pressure to show that we are increasing in strength, in my opinion, at least. Just looking to see if we do on Monday get above our prior buy pressure point to show that we are increasing in strength. And then from there, we will be looking for confirmation on those stronger moves above our previous buy pressure points that gave us the rally that we have been getting. So again, keeping that in mind, along with our EMA lines here, our 12 is still above our 26, showing us that we have strength at this point in time. But if we start to curl over here and we start to get a bounce on the DXY, again, on the dollar, on our 20 weekly moving average, then we could possibly have a cool down in the market. And that's exactly what we're looking for, to see if we do cool down, if we have a possible correctionary phase, to look for more proof of concept above the upper end of our channel. If we get a possible rejection like we did prior, again, as you guys can see multiple times, getting rejections on the upper end of our channel, this is what we're looking to see if we can avoid, is to get rejected on the upper end of our channel like we did previously. So again, a nice continuation from Nick Timmeros, giving us this anticipation that we have been getting, a nice gap up that we had from CPI, a lot going for us here. However, if jobs reports come out higher than expected this week, then we can take away possibly this anticipation, and that's the last thing that we want to see here, is taking away any of this anticipation that we have been getting on the lower end of our channel, because that would show us that we have possible room to hit the lower end of our channel one last time. Now, as far as if we have room to run to the upside, as you guys can see, we are not in overbought territory. Again, we did have our divergence that we mentioned again a few weeks ago. I think it was a month ago now. We mentioned our divergence. We did get divergence here, again, getting higher lows here as we did get lower highs on our price action, showing us these divergence. And that was also exactly when Nick Timmeros mentioned that possible Fed pivot here. So again, we did have this continuation. Now looking to see if we will jump back into overbought territory. We are just below overbought territory, but again, like I have been saying, even if we do jump into overbought territory, the last thing that we want to see here is getting divergence upon lower highs here. As you guys can see, we do have, again, bearish divergence that we have been getting. If we get a possible overbought territory scenario here, we do not want to jump into overbought territory and jump out of overbought territory and drop below the median of our RSI. That would give us, in my opinion, a very big sell-off in the market. So again, just keeping that in mind as we are leading into resistance, a very nice continuation that we've been having from our divergence, and from Nick Timmeros mentioning that possible Fed pivot, a nice continuation with decreases in CPI. We're now looking for that continuation on that anticipation leading into December's Fed rate hike, where Jerome Powell will speak. And again, there will be one more CPI coming out just before Jerome Powell speaks in December. So keep that in mind. So we'll see exactly what happens here if we do get our proof of concept on the up end of our channel here for a possible continuation, or if we do get higher than expected employment numbers and we have a possible cool down. We'll see exactly what happens, guys. Now, again, with that said, if you are a day trader or you are looking for very volatile breakouts, we mention them every single day in the Instables room for only $15 a month. You guys will never miss a breakout alert today again. And all of you Instables, again, we will continue to go at it and stay patient and take what the market gives us leading into jobs reports, looking for that continuation on anticipation that we have been talking about every single day. And again, just taking one day at a time in the market is extremely key. Don't let what the market has to come or what the market has done let get in the way of what you're doing day by day. Again, staying blessed, taking what the market gives us, guys. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.